Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we got a day ahead of us because the Bank of Japan has just completely upset the balance of markets overnight. I mean, yesterday we definitely got some of the things they were expecting, like the lower liquidity, but there was more activity than I expected. I have to wonder, maybe there was people in the know, and I was not one of them yesterday, but now we know. And we're probably going to see some interesting trade today. So let's come over to the charts and see how that has affected everybody here. So coming over to the treasuries, man. So we're still higher than Powell post Brookings, but and definitely when you come over here and you look at this, is this not? I hate it when it does that. Then pick up the next track. Definitely those last three candles down look kind of ugly, right? So Bank of Japan adjusting their ceiling on the treasuries, or the ceiling on their rates means sell the treasuries hard, right? Rates in Japan go higher, treasuries sell. Now, maybe they've already done the extent of the move, but that's where they're at. S&P 500 responding accordingly to the downside. Let's look at some of the others. Oil here, oil's still within a range. Natural gas declining a little bit further. That's interesting. Gold and silver actually jumping quite a bit on the Bank of Japan news. Maybe some flight to safety going on there. It looks like Bitcoin also spiked on the news, although it's not helping them too much. And the dollar getting smacked down back below 104. So the whole thing though is this morning the treasuries are in the upside. Nonsense. What do you mean nonsense? What? Sorry. Well, you get a candle like that. You say it's nonsense. Okay. It's definitely. Oh, sorry. You didn't even see the candle. How can you look at a candle like that when it came out and say that's nonsense? No. Bank of Japan definitely moved the markets here. Now, will it continue to be a factor today? I don't know. But the other thing is that, what are the flows going to be going into the end of the month? And, I was saying you're going to get some gamma unclench and that sort of a thing. So maybe Monday you might see some different action going into the close. You might see some different action yesterday than you do today, but it sure didn't look good yesterday, did it? It kind of looks like they are in the mood to just sell into the end of the month. Oh, I see. You were being sarcastic, Lucas. I spent an entire hour arguing with some Discord traders on our Discord that the move was due to Bank of Japan. Well, they said it was due to some technical lines on a chart, and the news was only the excuse for that move to happen. Who said that? Oh man. Wait. There are definitely some people that are yapping a lot in the chat that are just not so bright right now. I don't think they're very good traders. Let's not say that they're not so bright, but they were freaking yapping all night too. Not my Discord. Okay. Phew. Here's the one on that one that the logic just doesn't make sense, right? Well, like how they arrived to that conclusion does make sense, right? That how they arrived to that conclusion is that they're completely dedicated and completely with all their heart believe in technical analysis. So when something happens that their technical analysis can't explain, they have to, you know, they have to come up with some sort of magical explanation for how it happens. So they'll go through every possible technical thing they can possibly think of and find one that happens to line up with that move, and then say, see, it was always going to do this. They knew it was the technicals, see, and they were signaling it in the technicals before it ever even happened. I mean, that's how they arrive at that conclusion. But the logic to it doesn't make sense. It's just, and I think it could only come from a person that is not educated on the structure of the markets, you know? Once you understand the structure of the markets, all these things, you know, it just comes down to what moved the orders. Why did the orders move? This is how many orders moved, right? It's simple. It's really kind of funny. It's like trading is really a lot more simple than we make it out to be. You just have to predict the orders. It's just that predicting the orders is really hard and hard to do. Okay, so anyways, I get it on freaking, you know, I argued with somebody else on Reddit. They're like, oh yeah, but I went and I did 100 trades and I'm hitting a 70% win rate. So that means that I'm going to become a billionaire now. And when you get somebody like that, it's like nothing you can say can change their mind. Like, I've been doing this like what, 6 years? So 80% of traders quit before 2 years, right? You come in, you take on too much risk, you can't keep doing it, right? So most traders don't make it past 2 years. So just the fact that I've been doing this 5 years puts me in like the top 20, maybe 10% of traders, right? And I come in and I have this argument with people like almost every day, right? On Reddit. And I watch them all blow their accounts and disappear, and I'm still around. And nobody ever sits back and says, maybe I am falling for the noob mistake, you know? Santa gets tons of requests for technical indicators. Well, I can make technical indicators for you if you want. Just make some BS setup and sell it as an indicator. Say, oh, you just take this every time, you'll be a millionaire. So, it's the way it is because people like it. That's the one kind of kink in it, is I've found that systems are much more predictive of how things will turn out than psychology or any of this other BS, right? But technical analysis is the one kink in that. Why does everybody, and I mean literally, when you look at retail day traders, practically every single one flies towards the technical analysis like it's a light and they're all moths to a flame, you know? Every single one of them. How do you explain that? I don't think that I can explain that through the structure of the market. I think that has to be the structure of the human mind, the tendency of the human mind, that the human mind doesn't like this kind of world where there is so much information it can't even process it, you know? There's so much information you can't possibly know it all, and if you knew it all, you wouldn't be able to process it into a real decision. So I watched this thing. What was it? It was from. What's his name? Is this kind of this astrophysicist guy, black guy, curly hair. You probably know who I'm talking about, but I can't remember his name at the moment. But he was saying that our minds are not linear, and it's so strong of an, or sorry, our minds are linear. It doesn't understand exponential, and it's like absolutely crazy. It's so crazy that your mind like ignores like the simple data in front of it. So he was saying, okay, you're at a pond, and this pond scum is doubling every day. The pond scum is doubling every day. So you've been gone for a month. You come back, and now the pond is half full. You've been gone for a month, and the pond is half. Yeah, it was Neil Tyson. That's who it was. You've been gone for a month, and the pond is now half full of scum. How long will it take for the pond to be completely covered in scum? Right? And you start thinking about it like, okay, well, if it takes a month to get to here, then how long would it take to get to here? 1 day. It doubles every day. So if it's half and it doubles, then it's going to be 100% the next day, right? The tendency in your brain is so strong that it ignores like the most simple, like direct information that's giving you the answer like right at the beginning, and your brain doesn't want to see it. Because your brain is very much wired to try and see linear relationships and extrapolate them out. So, guys, we're using a 5 EMA strategy. So first of all, EMA moving average, especially on intraday timeframes, worst moving average you can use. So when we enter, when a candle is not touching, but there is no logic behind this, but it works and is backtest with. Yeah, so like I gotta tell you, man. So I tell you, there's kind of another side to like this win rate thing that I don't ever touch. But, you know, there's it's Filthy Quant on TikTok. He talks about this a lot. I don't think that he does a very good job of explaining it, but I think that his answer is really a more correct answer, a more pure answer than what I get into. So what he says about this is that win rate, the way that a retail trader considers a win rate and the way that a quant considers a win rate are different things. So a retail trader will come in and they will say, I took a trade and I made money, or I didn't make money, and that's my win rate, right? Well, from a quantitative perspective, that doesn't really work. Like, what about the times when you expect something to happen, so you take the trade, and then that thing doesn't happen, but you still make money, right? So how do you account for that? So a quant will do something else. They'll do what we call a confusion matrix. They'll do something like this, where they'll say, okay, here is what I expect it to do. Let's say we're predicting whether the day will be up or down, right? Here is what I expected it to do, and here's what it actually did, right? So here, this day, I expected it to go up, good, right? Here, I expected it to go down, good. And then these ones are where they differed, right? So these are X's. So this is a confusion matrix, right? But these are going to be like percentages, right? This is going to be like, maybe this happened 26% of the time and this happened 5% of the time, right? Then that's actually your win rate, right? And that's how they calculate win rate. It's a different sort of a thing. Most frameworks that a retail trader kind of approaches their strategy even from doesn't even allow them to do this kind of level of analysis, right? It's hidden from them, right? My side of it is that you're trading it for, like, this guy. He trades it for a week and then he says, I did 100 trades and a 70% win rate. That must mean that it works, right? Well, that again is your linear mind playing tricks on you, right? So if you have a 70% win rate, that means your losers are going to be less common but larger. So you have these data points that there aren't as many data points, but they are actually more important to the overall result that you get, right? So you can't come in and say, I took 100 trades and 30 were losers, and that's enough, right? Maybe if you had a large enough data set that you had 300 losers, right? And then you're getting into, you took 1,000 trades and you had 700 winners and 100 losers, right? But even that might not be able to capture the statistical behavior of your system, because really you kind of would have to look at it from like a daily or weekly period. So what's likely to happen to you is over a 2 to 5 year period, you're going to have this period where the strategy is just absolute shit, and it loses like literally every time. I'm telling you, man, it seems like that would be statistically improbable, but it always happens. It almost always happens, right? And so in order to see those kinds of tells, you probably need like 10,000 trades. If it's like a real scalping sort of a thing, you might need like 10,000 trades to be able to see that, right? Linear brain can't even fathom a number as large as 10,000. Like once you get to a number over like 200, we can't really think about it, right? So I think you have a good point though, Lucas, which is don't be results oriented. I think that for trading, you really have to be process oriented, right? You have to be able to come in and have a system that there's something behind it, and you have to just focus on your process because you don't have a whole lot of control over the results, right? All of the results is done on a much higher time frame. All of the what gives you results is done in your study of the particular behaviors that you're taking advantage of and understanding that current market, etc., etc., etc. So whether you understand that for what we're doing in particular, because we're discretionary and we're trading informational content, it has to do with how well you understand this market. Did you know that the Bank of Japan was going to do something last night, for instance, right? You don't necessarily have, there's only so much that you can do about understanding current market. You might have all of the information and just not get it. That's just going to happen sometimes, right? So all you can do is focus on your process, going through all of the news and reading the stuff that you've got to do and doing your research every day. That's like the only thing that you can do, right? So you have to focus on the process for sure. The money flew to the inside of my pocket. Okay. I have to say, here this morning, the movement in the treasury looks pretty varied and random. There's not a super clear trend in the treasury. Like we moved down from the Bank of Japan thing, and now we've kind of just been like sideways. Recovered a little bit, but now sideways. Yeah, it's interesting to me. I did notice that the ZB, like the range of the ZB here is a lot larger, but I'm not actually getting a shift in my spreads yet. So I'm not sure what's with that. I should probably try and stick to one subject for a whole. So I was thinking about this morning. It's like we should really stick to one subject for the whole stream. So is that the subject that we're going to be talking about? Is why technical analysis is stupid and you need to be process oriented? Maybe. No trading. Well, normally I would be hesitant to take a trade, but given the situation, I think that we should be able to find something. It's just right now the market's not giving me anything. So well, we do that when we do no, actually we don't. I'll tell you after the fact. You got to remember that point number one is I'm not trying to do this from the perspective of I want people to follow me. Right? I don't want people to follow me. It's certainly not live. And you notice when I take a trade, I usually don't say anything. I take it and then people like 5 minutes later are like, oh, you're in a trade? You're rooting on a particular trade? Yeah. Oh. I don't want people to follow me. Not giving you anything based on what's your filter? Well, so we're basically the reason why I would say it's not giving me anything is because so here's the move down, right? So we had the move down. Now you are going to get post meta order impact sort of a thing, so it's going to come back a little bit, right? And now since then, sideways. So that's the first thing. So we don't have any kind of evidence within the flows that there's like a large meta order going in. There was some selling here, but note that selling didn't really have very much lasting impact on price, right? So what caused the move down the Bank of Japan? Where you been? Yeah, well, I mean, for me it was last night, but yes, the early in the Japanese trading session, the Bank of Japan came out and changed their yield curve control policy. And basically the cap on interest rates for the 10-year is like much higher than it was. And that means higher yields. That means treasury sell. Yeah. So that's why they had to move down. So I would be thinking like, oh, you know, and especially given the situation, because the market, I tell you what, the market commentary is very much tilted since the Federal Reserve meeting to, oh, the Fed is hawkish as it ever is, and they're going to just keep raising rates and yada, 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 right? So I think that the traders overall, like the traders overall, are very much biased towards higher rates right now. So that combined with the Bank of Japan, I think we'd have to be looking for a short. But again, like, is the volume really effectively moving price? It's not. So we don't have a trade. The flows are kind of a little divergent from price right now, and so that's not when we want to trade. Why only the latest issued bonds are considered benchmark? They have neither the highest volume nor the most accurate representation of the whole curve goes up. Okay, so I think that the reason that is because the most recent bonds don't get included in indexes, and they're not going to be trading in the futures. And the reality is that the amount of volume and activity that takes place in the bond market overall because of indexes and so forth is vastly outnumbers, as far as I understand, the amount of volume that is from people that are just going to buy the bond and hold it, right? So those people that are just going to buy the bond and hold it, they will, a lot of those will just go to the auction, get it straight from the government, and not go to the secondary market. Whereas the secondary market is, the majority of the volume in the secondary market is futures, hedging against futures, indexes, right? Not all baskets include the latest issues, right? It's a lot like the treasury. There probably are a lot of ones that include the latest issues, though. I mean, like, well, so for instance, there's TN includes the latest issue, right? I don't know. But there's probably another side to it too. Like, there's not actually a deal or a reason to be getting involved in the security immediately after the auction. Like, you're not gonna do better than what you got at the auction, something like that. I think I'm short bias, but I think that I've got to come in and say, like, well, volume isn't being very predictive. You know, we're basing that on a past piece of information. What piece of information do we have, like, for future flows? I'm not sure that I actually do have one now. So I think that I am I don't think that it would be the correct decision to say I'm short biased. I mean, clearly I am short biased. That's like an acknowledgement of my own biases, but I think, like, my analysis of the information tells me that I just don't have a direction yet. So why are they considered the benchmark, my original concept? I don't know. Well, like, I mean, the thing is the difference between, like, the most recently issued. Well, okay, so I think the reason that it's a benchmark is because it makes a lot of other calculations easier, right? Like, if you know what the current what is the on the run, if you know what the current on the run interest rate is, it's a lot easier from there to calculate a bunch of other interest rates, like forwards and forward yield curves and things like that, right? That's the way to judge future behavior, is having uniformity of volume, liquidity, and volatility. Maybe. So I wouldn't put it that way, Lucas. Man, I'm having two conversations at the same time. I think that from the math that I've learned, once you know, like, what the on the run is, it's a lot easier to, like, generate curves and things like that. And I think that that's why they're primarily interested in it. Okay, so we want to predict future orders, right? So really what we're looking for is a piece of information that will directly affect the future orders, and the rest of the market doesn't really know about yet. And sometimes you can get pieces of information that can predict future orders for, you know, our whole session, or maybe even several days, right? But there's this other side of it, which is the technical side. So I don't use the term technical analysis or technicals, because to me, technical analysis means trying to use past data to predict future data, right? So instead, what I would be saying is, from the quant side, what are some of the empirical properties about markets? Well, one of them is that market orders tend to have a strong impact on prices. Okay, so that's an empirical property that we can kind of rely upon, is if we're seeing market orders. And the other one is that whether the orders are buy or sell tends to be autocorrelated. So if you're getting an imbalance in buying, that tends to persist because of large meta orders, right? So that's the empirical behavior that we're looking for. If price and cumulative delta are not lining up very well, then that means that particular empirical property of markets is not super influential at that time. That's what that means. So that doesn't necessarily mean that when those things are in line, that we have a better way to judge future behavior per se, because we might have a piece of information that says that it's going to go up and the volume right now doesn't matter. And you notice that a lot of the trades that I make, you know, I'm kind of looking for a time period where the volume is kind of nothing's really happening and it's just a good price, because I think I know what the future orders are going to be, right? But you can kind of combine all of these things. You get your information, and you get the stylized behavior of markets, and just catching a good price, executing correctly on the DOM, all of these things can kind of combine together a little bit to help you. So if I don't have something that I really strongly believe is going to predict the future orders, and I'm not seeing any kind of giveaway in terms of like the stylized behavior of markets, then I probably should just sit still. So going back to the whole thing about why are they considered the benchmark, one of the things that I think is really interesting is the whole stop through thing. So if you're not familiar with this, and granted, it's not something that I know a ton about because I'm usually not around to trade auctions, and I don't get the data and reports ahead of the auctions. I've seen some news squawks, they have really good reports to kind of give you an idea of like what people were expecting going into the auctions and stuff, some analysis on that. But basically there's like what is the interest rate that comes out of the auction compared to what the interest rate was in the secondary market before the auction took place. And that's essentially what we call the stop through. So the further of a stop through it is, or I forget what the term is for the other direction, that, you know, the better or worse the auction is, right? So what does that kind of tell you? Well, it kind of tells you that, you know, the difference between two QSIPs that are a month apart is it's not a ton. I mean, there's a measurable difference, and the market puts a lot of effort into measuring that difference, but for like all practical purposes for what we're doing, it's kind of an interesting thing. Man, when I woke up this morning, I was having like a real sneezing fit, and then I come into this room and I'm perfectly fine. He's not in the US. I think he is in the Netherlands. Oh man, Ben Shapiro is taking live calls, and you can call him on the phone. That's got to be interesting. That the market is a woman if you're confident enough. It does what? No. Neither women nor markets work that way. So being confident in around women is a heuristic that hides the more sophisticated dynamics that are actually going on there. If that makes sense. So like women like confidence because confidence is a sign that somebody is competent, right? Somebody is competent, and women are attracted to a man that is competent and is going to be able to provide for them, is kind of the biological underpinning of that, right? So there's a step beyond confidence, right? So you come in and you're really pompous and everything. Women are like really good at sniff, especially older women. Like the problem that women have is that, especially younger women, is that they mistake confidence for competence, that it's always indicative, and they just look for the most confident guy, and that ends up getting them together with like a narcissist or, you know, swindler, somebody that's not a very good partner. So they kind of learn that they have to be more discerning than that, and that there's a lot of guys that are just all fluff and no substance, right? So it was really comes down to like if you're a guy and you're trying to get women, right? The first thing that you can do that's going to help you be more able to get women is to be competent in something, right? You need to be able to know that thing and be able to prove that you actually know what you're talking about, right? Seth, the pickup artist, please. So, like, look at it here on this stream, right? If I go out on Reddit, right, and somebody starts arguing with me about technical analysis, right? I mean, maybe the way that I react might grate on people or things, but the reality is that the reason why I'm arguing with them is because I really know what I'm talking about, right? I've basically dedicated my life to doing this thing. I've been trading longer than almost all of them that you're talking about there, because they're like in their first 1 or 2 years, and I've been doing it for 6. I've been following the markets for over a decade now, right? And there's a very large body of empirical evidence that proves these things that people just ignore, right? So I'm very competent, and because I'm competent in it, I can make very confident comments about the way things are, ones that some people might find insulting because they think that they have it figured out and they don't like being told that it's not, right? You want competence. Whatever it is that you're going to do in life, know it. Know it, man. You know, and the same thing goes for your hobbies, right? Like if your hobby is weightlifting, then you've got to know a lot of stuff about weightlifting. Right? Wait, what are you guys saying? Some of these older comments are covered up here. There are no women on Reddit. There actually are a lot of women on Reddit. Reddit has gotten to the point where it's got pretty widespread reach, and so I wouldn't say that there's a huge population of women on Reddit per se, but rather that when a women's opinion would be valuable, it shows up and you'll see it. So I don't know. There's not a lot of women in trading in general because women are just not going to be attracted to that kind of risk taking. In fact, women I've found are much more interested in, index investing and stuff like that. I think one of the problems that I've had when discussing things like markets with women that are interested in markets is convincing them to take things to the next level, right? Like, okay, cool. Yeah, everybody should max out their 401k and invest in index funds and everything else like that, and set yourself up for retirement. Okay, now you've set yourself up for retirement. Maybe you have some passive income in the form of like some rentals and stuff, and you're over the 2.2 million threshold. Now what do you do? Right? You should, and if you're an expert and you're like educating people on these things, maybe you should become an investment advisor, right? Like you should take things to the next level because there's, things that you have to do in preparation for the actual retirement that becomes more complicated than just invest in an index fund at that point, right? Everyone on Instagram is either a bot or man masquerading as a woman, Seth. That's why I am single. No. Well, so here's the first thing, actually. I don't know. See, I don't know enough about your experiences to know, like, where are your hangups, right? I can tell you one of the things that shifted things for me the most, though, is this. Take it offline. The dynamics of the online sexual marketplace, let's call it, are not in anybody's favor, really. The only people that benefit from that system are like the top 10% of men. So unless you're like a billionaire and really, really good looking, it's not super. So I'm not saying that online can't be a good way to find women, right? But what I'm saying is that you don't want to spend a ton of time texting and stuff. Because what'll happen, 2.2 million is enough for retirement. No, the reason why I said 2.2 million is because that's kind of the threshold where there's no financial instrument that you're not allowed to be involved in. That's where you've reached the income thresholds where like having a real investment advisor can be valuable to you, essentially, right? So you're either going to pay an investment advisor or you're going to do it yourself. And I'm just telling you, doing it yourself is a lot of work, managing that amount of money. But that's the amount of money where it starts to become like you need to go beyond just an index fund now, right? Okay, maybe you don't need to. I did I say a billionaire? I should have said, unless you're a millionaire. Like what? Okay, so like for instance, when you have that much money, you want to keep yourself sufficiently hedged, or sufficiently diversified, right? So keeping all of your money in an index fund is probably not appropriate. You can actually reduce the risk of your portfolio by doing some options or investing in small startup companies or some of these more risky ventures. If you're properly diversified, can actually reduce the overall standard deviation of your daily returns. Okay, when you're talking about. But in order for those kinds of strategies to make sense, you have to have a pretty large wad of cash to invest in the first place, right? And then on top of that, there's the issue of what kind of investment allocation that makes sense for you in your 20s and 30s is not what makes sense for you in your 50s and 60s. Okay, so once you're getting into your 60s and you've already made the money and you already have enough for retirement, the last thing that you want to do is come in and have the S&P 500 decline 50% in a year, which happens, and then you have to retire, right? So at that point, you want to be shifting your allocations. You're going to want to have a lot more things in bonds, and then when you actually retire, you're going to want to shift things again. So now at that point, you are going to have to like pay taxes on things, right? So like now that you're taking the money out on your investments, and you, generally speaking, you have to pay taxes on it, right? But what if you want that money to like continue to grow and stuff like that? Because they make you take the money out of the IRAs and the 401ks and stuff like that. So what you can do is you can kind of make it tax deferred by rolling them into annuities and stuff like that. So now you will have to pay the taxes when you get the distributions for your annuities, but now you have a system that will give you consistent income into your bank account every month to live on, right? And that money continues to grow with the market. And yes, you pay taxes on it, but not until you take the distribution. So it's tax deferred. Right. So that's where I'm saying when you get older, or when you get over $1 or really $2.2 million is when your investment advisory needs become more sophisticated. And one of the things I found with a lot of women in this space is that they learn all of the basic stuff like index investing and everything, and that's like what applies to them, and so they're like, cool. And because they're not like thinking like, I'm an aggressive entrepreneur, I'm going to go and try and help as many people as possible and start a business with this, etc., etc., they don't go into the more advanced stuff when there's real value that they could provide with the more advanced stuff, right? You have like 98% of your, well, yeah, because you that's funny, but that's because you're using it to trade with, not to invest, which is kind of interesting. But grow while you're young, sustainability when you're old. Yeah, which is kind of, I mean, the low interest rates kind of doesn't help either, right? So there's all, I don't I don't really know what the answer is on that one, but the low interest rate really sucks when you're on the fixed income, right? Anyways, so we're talking about the top 10%, right? I'm trying to think of like a trader allegory for this, but I don't know if I have one. So when you are online and you're texting people, right? You get a dopamine hit from sending a message and then somebody responding back to you, right? I get a dopamine hit when I say something and then you guys react to it and then I'm able to react to it again, right? Like that feedback creates dopamine. Just like when you're on playing your mobile game and the mobile game makes all these cute sounds and stuff like that, those are there as feedback mechanisms that produce the dopamine, right? Okay. So online dating is really fun because of the dopamine. But here's the thing. Here's the thing that kills you. Okay. That this is an important thing to understand about dating and the human mind, and it applies to trading. Okay. Anticipation and feedback creates the dopamine, not fulfillment. Okay. So what will happen is you're texting them, you're texting a bunch, you've been texting for a month, and you finally convince each other to meet up, and then you meet up and the thing happened. Like the reward that you were going for, it happened, or that they were going for it to get asked out happened, and you don't get the dopamine hit from it being fulfilled. So now all of the fun and excitement of it is gone, because you were getting it all from the texting and not from being in person, right? So what you should do instead is you should use the online dating apps purely as a discovery mechanism, and that's it. Once you've discovered a suitable candidate, you ask him out and you set up a date and you don't talk to him. Don't keep texting. Leave all of that for the in-person interactions, and then you get to have all of those experiences of like discussing and learning about somebody, the mystery, discovering it in person, where you also have the added advantages of the oxytocin that's produced from socializing and being able to touch each other and all of these sorts of things, right? So when it's in the online marketplace, right, like the guy that everybody wants to match with, he has an advantage in that sphere, right? But for everybody else, the sooner you can get off of the app, the better. Yeah. So that's my advice. So I don't know if that's what you're doing, but that I did that. And then I remember in particular, there was this one girl that I texted for a long time, and I thought we had a good thing going, and then like it just all fell apart all at once. And they didn't, I wasn't able to meet up with them, and I was kind of like, that was like a big mistake. Like that was a big waste of time, and it was like very emotionally damaging to me. So ever after that, and I had read from people that this was the way to do it on Tinder anyways, and I did that, and it was very, very successful. If I matched with somebody, I would talk with them just enough to verify that they weren't a bot and that they were actually interested in going out. So like 5 to 10 messages, and then I would set up a date, and I didn't talk to them after that. And when I did that, the dates were so much better, and I was so much more successful. That shit was more complicated than my 20 years of marriage. Haven't used Tinder and ilk for the last 7 years since that. Simply ask for coffee. 2 females I find attractive. And okay, so here's your other question, right? From what you just said. So I'm just kind of spitballing here, okay? But what is your filtering mechanism? What does the open on the DOM? That was the regular session open that happens at 8:20 Eastern time in the bonds. That was the price that they opened up at. The Jigsaw DOM writes that on its own automatically. Is that what somebody was asking the other day? And I was like, what are you talking about, open? this number, you know. So when we're talking about technical analysis, yeah. So again, technical analysis is the study of trying to use past market data to predict future market data. That's what I consider technical analysis, right? Okay. That doesn't mean that there aren't price levels that can exist that might matter. It's just that you might not be able to predict the orders off of that level, okay? And the price levels that matter the most are going to be your open for the day. Well, really like current open, previous day's open, high, low, close. And then 50, 100, 200 day moving averages. Those are your most important levels. And then there are levels based on CTA strategies that you would want to be aware of. And there are levels based on options gamma. Okay. So I don't have any numbers like that for the treasuries right now, but I think we're pretty much to the point where like we've pushed through all of the CTA trigger levels, and the CTAs are like going full on short right now. Okay. So those are levels that I would say matters. They don't necessarily predict future orders, right? The kind of levels that don't matter, I tell you, previous swing, whether we're higher or lower compared to the previous swing, Fibonacci levels, absolutely useless. Okay, short-term moving averages, useless. They're not very effective at predicting future orders. Well, while I've been yapping, we got a good short, and I did say, you know, I'd kind of be leaning short, and it looks like we could have made at least 20 bucks. Oh, how much money do you don't have to have any money to be considered a 10. That's the thing. I mean, it gets harder as you get older. It does get harder as you get older, but like that's the thing. Again, what is it that women are attracted to? That women want somebody that's going to be able to protect and provide for them when they have children, or at least that's the biological underpinnings of that. I'm not saying that that's like what all women are thinking in their head, because obviously women have frontal cortexes too, and so there's a whole lot of thought that goes into things that's unique from person to person. But the biological underpinning is that they want a partner that is competent, essentially, right? That's very different from what the man looks for, because the man is primarily interested in that they're fertile. Okay, but so money is a very strong sign that you are competent. Okay, so yeah, women are attracted to money. Okay, but you don't have to have money, right? If you can show them that you're competent in other forms, right? So most people might not understand it at first, but the fact that you have such a large wad of cash that you are able to go and trade futures for, you know, and live off of that, just trading a basis, and then decide you want to go back to school is really impressive, right? I think that gives, you know, I think that that's a asset to you, right? But the question I was going to ask you is, what are your actual filters, right? So you're probably sitting there thinking, okay, there's a girl, she seems pretty, I'm going to go in and I'm going to go ask them. And the question that I'm asking you, and this is the really tough one, is that filter actually serving you, right? So you can think of it from a trade perspective, right? Every time that you see a woman, a single woman, is the same as a potential trade, right? Do you approach every single woman that you come across, right? Every girl that doesn't have a ring on her finger, you go and talk to them. Probably you don't, right? Probably you say, you know, she's pretty, she interests me, I go up to them, right? They all somehow are busy for the next 2 weeks, every single one till date. Well, Okay, so there's another side to that, but let me get into that in a second. So the first thing is that, you know, like, how do you actually decide who you're going to talk to and not talk to? And most people will determine that based on attractiveness. Okay, girls will do it based on height, and generally speaking, these filters don't actually serve you very well. Okay, it's like saying I'm only going to take a trade if we're above the 10-minute simple moving average, right? You can do that. People trade like that, but you're going to miss out on some of the best trades if you're going to do that, because some of the best trades are reversals, right? So you need to think about, well, what are the filters that you're going to use to determine who I'm talking to, right? And find filters that serve you better. Find filters that give you a better probability of finding somebody that's actually going to respond to you, go out with you, right? So that's the first thing. I do the due diligence using my gut. So the second thing, though, is that most people don't like being approached in public anymore. Like, that's just the reality of it. If I'm sure there was probably a situation where, like, I was on the bus or the train and there was a girl that would have been interested in me, and maybe they would have approached me and talked to me. I would probably be really bothered by it. Like, when I'm traveling, I spend that time, I'm really, like, self-reflecting. I'm thinking, I'm, like, really in my head, and I don't want to talk to people on the train. And I think that most people are like that these days. It didn't used to be like that. People used to be much more friendly in public, but now people are not friendly in public. And that's especially true in Europe, right? It's especially true in Europe. You don't want to bother people when you're out walking around. So if you're at the coffee shop and you see a cute girl and you approach her, you're probably not going to get as much success from doing that these days, right? So what you're gonna have to do, man, so we have been getting a pretty strong sell that I should probably be involved in, but I missed it, and then they just dropped there again. Pretty impressive stop run. You might get away with it if you're foreign, though. Yeah, maybe. I'm gonna bet that most girls in the Netherlands don't respond too well to a random Indian guy walking up to them. They're out and about, right? So what you have to do is you have to put yourself in situations where people are more open to socializing, essentially, right? So you can do it at a club. A club is kind of can kind of be a shit show, though. like at a club, yeah, you have the opportunity to go out and talk to people, but the music is loud, so it's kind of hard to talk in general, and there's a lot more competition, right? So what I would recommend instead is you need to get involved in special interest groups of some sort. So you need to find what is your special interest, and try and find a special interest that has a lot of women in it, and go to local meetup groups about that subject. And that's where people want to actually talk, right? And then if you have a more than 2-minute conversation with a woman, you ask them out. I tell you, it's a lot easier on Tinder, though. Just get the Tinder, get a lot of really good pictures, and if you're older, pay for the app and just swipe, and then get their number as soon as possible and set up a date. Because if they matched with you, you should be able to go on a date with them. Yeah. I mean, there's a lot of problems with Tinder, and I think it could be leading to a lot of really big problems in our society, but it really is the best discovery mechanism at the current time. So So it seems like the 5-year was kind of a driver here. We definitely flattened. Did this move start at 6:45? Yeah. Okay, but I didn't have anything that would predict this, but now that this move has been going, we have pretty good flow to the downside. We probably could have gotten, if I wasn't so involved in chatting, I guess maybe I made a mistake today, but 16.5 probably would have been a spot that we probably could have tried to getting in, right, and would have been safe. Let's just watch this here. I'd like to see. Well, we have 5 minutes to the open in the S&P 500, huh? So get on seeking arrangements and be done with it. There you go. What is 50 USD margin on? Yeah. It means that the minimum amount of money that you need in the account to be able to open a position is $50. And if you go below $50, then you'll be kicked out of the position. Oh dear, you know what? I'm just realizing that I don't really have my sound set up correctly here. Let's fix that. I am using Rhythmic Data for data provider. So I think I missed some comments here. Looks are off the table for me. A lot of people choose their girl based on looks, and like one those goes away too. If that's all she's invested in, that's all she can provide. Sadly, most women think that's enough. Yeah, I have to say, like, I've found that looks is a very poor indicator. It really is. Like, there's a reason that we evolved that way. Okay, and I think especially people, it's kind of like, so you ever watched Moneyball? And they're like, oh, you don't want to draft that guy because his girlfriend is ugly. That means he lacks confidence or something like that, right? Well, look, that might have been a heuristic that we evolved over thousands of years that was pertinent like 10,000 years ago, but it's not really pertinent in our modern world. It really isn't. So, like, what are the things that will matter the most to your relationship? Okay, well, health does matter. Okay, health does matter. They don't necessarily have to be good looking, but you want somebody that's healthy and has good health habits. Okay, and compatible lifestyles. Okay, so if you want to have a traditional, you want to have kids and the wife stays home and watches the kids, sort of a marriage, then you need to find girls that are into that, and you probably don't want to pick up the career woman. That's just the way it is. They've got to be compatible. If you wake up at 5:30 every morning so that you can day trade, and then you day trade for 2 hours, and that's like a really big problem for your spouse because they hate waking up early, probably not as compatible, right? Those are the sorts of things that matter. It's the same thing with trading, right? How do we decide which trades to take? And a lot of the time, the things that we're using to decide whether it's a good time to trade or not don't matter, right? What will actually determine the future orders? That's what matters, right? We in a situation where you can predict the future orders or not, and that's when you trade. Period, right? Game for the market's gonna stay listening to relationship tips, right? That means I only need 1,000 USD to no. Well, I mean, on NinjaTrader, you can open up an account on NinjaTrader with like $400, I think. Like that's their minimum account size, and then yeah, you can come in and you can trade like micro yield futures for like $50, right? And just take one contract. You're never gonna run into your margin limits ever, you know. Generally speaking, your account should be much larger than the margin limits. Just saying. 2, you're breaking out of the FOMC range is a good observation. In ZN, we only kind of briefly touched the overnight lows, which were at 115. That's probably why there was a little bit of a stop run from 13 to 10 to 11. But now there is a little bit of support there. So do I have to see this is kind of, like I said, like the overnight low, that is a price level that matters. That is one where, like, if we bounce here or we go lower, you're probably going to see like a real shift in the order flow. It's just that price level itself does not predict what the order flow is going to be very well. So if I knew something, if I knew that the future orders were going to be buying, this would probably be a really great place to get long, right? Yeah. Yeah. To take it a step further, is she willing to change to better accommodate your goals and dreams? If not, there's going to be a daily battle about things. Yeah. Well, I think that most women do. You know, I think the struggle that most men run into after they get married, you know, is, you know, how do you get people on the same wavelength so that you can better accomplish goals, right? My wife never just like straight up believes anything. Like it's so funny. She is like not an open-minded person at all. If you tell her something that contradicts her previously held values and beliefs, she fights against it so effing hard. I don't. It's just the personality. That's a personality trait, right? So to get in and be like, okay, here's the thing that we're going to do, and we're all going to work towards this thing to get like everybody on board for that sort of a thing. I've found that very difficult. I can do that with people. Like, but for some reason in the family, I haven't been able to be very effective at getting that. Well, I guess we have, and maybe those, I only think about the ones where it's been hard and there's pushback, but I don't know. That or men feel like they're disrespected, right? But that one is kind of interesting to me, because it's like, what is it that makes a man feel respected, and what makes a man be actually respected, you know? Because I feel like that kids just have a tendency to be shitheads anyways. You know what I mean? Like the tendency of a kid is going to be, my parent doesn't know, I'm smarter than the parent. And, you know, I think that just every kid is like that. I don't know how you get them to sit down and be like, okay, they're right about this thing is important, this thing is not, but they just don't listen. See, here's the thing. When you're a kid, when you're like 14 to 17, okay, what's going through your head, right? You want to make out with girls or boys, you know, whichever way you are, you know. So you're looking for sexual activity. You're looking for social prestige, I think, for a lot of people, and you're chasing that dopamine high, right? Because you get more dopamine when you're that age. That's why a lot of like your favorite shows or games or whatever you tend to discover like in like from 17 to 26. Okay. So those are the things that you're focused on. But what are the things that end up having like the biggest impact on your life? Okay. Doing well in school, particularly math. I know math sucks, but math is one of those things that you just trudge through. Everybody thinks that you're supposed to be naturally good at it. Some people, they're naturally good at it and something. No, don't worry about that. Trudge through it. Trudge through it. It makes such a big difference in your life. That's the first most important thing. What's the second most important thing? It's not social prestige. It's not like getting all of the action or anything like that. Look, you have the whole rest of your life to catch action. And the action is very different when you're 21, okay? But what you do need to do is you need to be developing the social skills, okay? So it's kind of funny. Kids at that age tend to be really cliquey, right? They only want to hang out with the people that are in their little friend group, and they don't necessarily like to go outside of their friend group. But the skills that are going to be most valuable to you are going to be being able to relate to a very wide swath of people and not just the people in your in-group. Although it's important to be able to form an in-group and understand those dynamics as well, right? Don't do math, kids. You'll be alone. Come on. I think it's really interesting. I mean, I think the reality of it is that math is hard for everybody, for most people. Like if math is easy for you, you're the aberration for sure, right? And that's why jobs that involve a lot of math pay so much. And like the thing that's funny about it is that the jobs that involve a lot of math don't actually involve a lot of math. It's like you need to understand the math to be able to make the decisions, but the majority of the people in the industry don't actually use the math on a daily basis. Even for a lot of like hardcore engineers, it's not an everyday thing. It's like when we're doing like the big redesign and then we have to do some of those calculations, but most of the work is in other stuff. This is why I think I got to tell you. Are we done with this subject? I don't know. Maybe not. Maybe I should stick with this subject. I've become really conscious about this. Like, I don't want to like shift subjects too often because then people lose interest and like they're in that subject. But I'm kind of like, well, I said something about that. Now I'm interested in talking about this other thing. I'm going to talk about this other thing. It is related. This is just a tangent, okay? This is where AI is going to change things, right? So everybody has this idea that like artificial intelligence is, like how is school going to work? Because you can just use the AI to write things now. You can cheat. Well, so number one, no, because the AI can be detected. So they can tell that it's not you doing it, okay? But what it does is it's just so many more of those mundane tasks are going to be done for you, right? So I think people always have this natural fear that means that they're going to be replaced, that they're not going to make any money, right? The reality though is what this really does is it enables almost everybody to be able to have the amount of productivity that like a software engineer has. That doesn't mean that software engineers are going to go away or that software engineers won't get paid as well. I think that software engineers will probably continue to get paid really, really well, if not more, because they'll just have to do more sophisticated things. But it means that everybody can do jobs that are as productive because with the benefit of the AI, right? So the overall quality of living for people in Western countries should theoretically rise to the level that most, that people that are making 70 to 100K are right now. So that is a big shift. That is a big improvement in standard of living. That's the way that it's likely to go. And everybody always thinks, oh, they took our jobs. No, it's not like that. It allows, there's infinite work out there, guys. There's an infinite amount of work to do in the universe, right? You just got to find it. And if one piece of work has already become so efficient that you can't really make money from it anymore, there's always going to be something else that's not as efficient. Always. You're just going to shift what you do. I graduated with a bachelor's in science and business and currently working as an accountant. Hate it. What would be the fastest way to become a software developer? Go back to school. So if you've you can go back and do computer science. This is like 4 years. And if you're already out of school and everything, like that's a tough jump. So, but this is the industry that is the best and easiest for you to just become a self-learned, self-directed person, right? So, there's freecodecamp.com, I think is the website. There's a bunch of other like education websites, just about any kind of programming language, type of programming, whatever it is that you're interested in. You can find stuff online that will teach it to you. And then you just have to be good at, thinking up, or they'll give you exercises, but actually doing them, not just reading the stuff, but like actually doing the exercises and coding stuff and getting the experience of like something not working and having to debug it and etc. You can totally do it. Totally. And in terms of like increasing your quality of living, that's the easiest thing to do in the economy right now, because they need software engineers. I understand not everybody can do it. But if you're a guy and you're interested in sciences stuff, you can do it. There's some people where the other thing is you need to have neuroplasticity. Okay, you need to have your neuroplasticity. Some people, when they get to their 30s and 40s, because they've never gone outside of their shell and they don't continue learning, they lose the neuroplasticity, and then making that kind of a shift is really hard, right? Well, we've been at this 14 now for quite some time. So that's definitely a clear liquidity hole. I would not be one bit surprised there's more selling in store here, but at the moment the attention is probably all on the S&P 500, which is selling at the moment. I'm trying to think of like what are the best hobbies. So I'm trying to go back, but now that we've done all of the tangents, your best hobbies to go and find women. I'm trying to think about it. I tell you what, there's a lot of women in weightlifting, but not necessarily single women. Olympic style weightlifting, that is, or like CrossFit. CrossFit, there's a lot of women too, but they're not necessarily single. I don't know if that's the best place to go. What are some other hobbies that are going to be like a wide swath of people? I'm not quite sure. I think part of the problem is that COVID is kind of really, you know what I mean? Like people don't go out and meet people or do group things as much now because of COVID. So you might have to build it. I think my plan for this year is in January, take the Series 65 test. I've not done very good since I got sick at studying for that. I really should be spending time like every day, and my wife always somehow ropes me into holding the child. Foods. Okay, there you go. My best hobby is eating nice foods. You could totally do that. You could get, and cooking too. You get into cooking and eating, and you could probably get groups, and you could probably meet lots of women doing that. Yeah, that would be a really, really good one. Running might be better than weightlifting. You get into running, like do Ragnar or triathlons or things like that. That'll get you people. A lot of sports are probably, you need to have a physical, I guess you need to have like a physical hobby and a mental hobby. you know? I kind of feel like that my hobby is day trading, but it's kind of gotten to the point where it can't really count as the hobby anymore. So the hobby has to be the music, I guess. I don't know. It used to be Unreal Tournament. Oh man, my favorite game, Unreal Tournament, like Epic has been like, they took it off of the Steam store and things. I'm like, I'm really wondering where is this going? Yeah, kind of game that I like to play is just not a thing anymore. It's just not a thing anymore. And I don't get very much from it. I would love to play games again and like be meeting people from playing games, but the last time I was able to get really into a game was Overwatch, and I kind of feel like that turned into a shit show, you know? So now I'm kind of like, maybe I just don't want to do that anymore. I'll just play Minecraft. I guess we'll just play Minecraft. They are selling it. So this might be, I don't know, this is kind of a little odd drop here. I am seeing the 6J starting to turn down again though. And well, the dollar is showing some strength here as well. That's interesting. Though the treasury hasn't been too correlated with the dollar, so. The older I get, the more I find computer games to be a waste of time. I keep thinking, why am I playing this? I have XYZ to do? Well, that might be the true. Well, as you get older, you just have more things to do, right? But you still need to do things that you enjoy. You need to set time aside to do things that you enjoy as well. You know what I think my hobby should be? You know what I think my hobby should be? Skiing. Maybe it's just because TikTok is showing it to me a lot. But when I was a kid, we'd go skiing every weekend. And we would just rent a board for the season. And it wasn't that expensive. I feel like it'd be hard to pay for that right now, but maybe in a regular year it wouldn't be. We could go skiing, and you could probably meet women skiing. So here's what it is that I think is like, okay, so like there's computer games that do music, etc., 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 right? Okay, what I really need is I need a rich person networking hobby, right? The rich person networking hobby. So here's my fear with that. I think that the rich person networking hobby is golf. I don't really like golf. I find golf boring. Make an app for that? What, to network with rich people? No, I don't think that would work. I don't know. We do need to be doing rich, but actually, and you know what the other hobby should be is service. You know what? I've had a hard time, like I'll think about it and like I'll go and do a little bit of searching, but I have had a hard time finding things where you could like be doing regular service on a monthly or weekly basis where they would also provide opportunities to network with people. But that's where it's like, you just need to join the country club. There you go. Too bad there's not any country clubs that are very close. I feel like that joining the country club, it would be too far of a drive to be worth it. Yeah, community work. I don't think that there's not a place on the internet to find community work that's quite as optimized as the other parts of the internet. You know what I mean? I used to do a lot with politics. I guess we could get back into that too. That's probably something that I need to do. I mean, the whole thing was that there was a lot of things that I did before 2020 that we stopped doing when we had our first child, and our first child has been so much work that I haven't really had the energy to do some of those extra things. But I think we may soon get to the point where we can do that, and I probably need to. And I think that in my previous marriage, my ex was the one that was kind of would get us involved in things, just, you know, because she was just always doing crap. But my current wife is much more reserved. She's not shy, but she doesn't go out and get involved in lots of social engagements and stuff, you know. So I'm gonna have to put some extra work in on that, because teamwork is a key value and is the one that I feel we are what I don't want to say neglecting or failing at per se, but it is the one that we need to develop the most right now. It's the teamwork side of it, right? Like I think I want to turn this, what we do here on the stream, into a little bit more of a business, and find ways for people to contribute in a business sense and be compensated for it, right? Well, I was kind of thinking there 88, what was it? 80, or maybe it was 7.5. I don't know, but like they're just pushing right now. It looks like they might break. I don't know if I can. Well, maybe at 6.9, but I'm a little bit concerned about this might go and flip back really quickly, because it's a little bit early. Yeah. Well, it's maybe it's time. Maybe it's okay for them to go down for new lows. Yeah, it seems to me like everything is in line for a next leg. I don't know how much reward would be in it, but it definitely does seem like everything is in line for next leg. I didn't think that you would get filled back here, but it's just the big orders in the micros are kind of doing a couple of weird things here, so. Okay. Oh, Anthony, I thought that, I guess I think there was another person that comes in here that's named Anthony, and I thought you were them. So, yeah, you're near, that's cool. So the numbers in the middle are the market orders, right? So, you know, 210 right there at 11.5, that means that 210 orders sold and cleared the bid, right? And what'll happen is if it moves away from that price and comes back, and it's been gone longer than 2.5 seconds, then the number will reset so that you can see how many orders it takes each time to clear it. Think of this: someone investing in his pension fund before the peak of the S&P and then retires when the S&P is down 95. What you can say? Oh man, that would be awful. Yeah, it would be. That'd be terrible. So the reason that I care about the resetting is I'm trying to judge how many contracts it takes to make the market react, essentially as a test of what the current liquidity conditions are. So if I'm seeing there's 889 there and there's more than that actually trading in the market orders because of icebergs and so forth, that kind of suggests to me that the bid side liquidity right now is actually pretty healthy. I want to see like what the inside is here. So typically you're going to see one side is bigger than the other. But if it's like below 200 contracts, they'll usually trade through that, right? So that's what's happening right now. They're trading through that at 12.5, but it's iceberging. So that again tells me, okay, the liquidity is pretty healthy. What the situation that you can get sometimes, and the thing that I'm kind of looking for is it'll be low in the middle. They'll trade it up less than what was offered trades, and then teeny tiny bit, and then they just trade back and forth like that for a long time. So that's a situation where where the latent liquidity is not very healthy, and that tends to make it difficult for price to move, right? So what we're getting right now is it looks like they're probably going to come back into this liquidity hole, but it looks like the liquidity on both sides is pretty healthy. So we're probably going to move here, but it may be more prone to having a significant pullback here than it normally would be, because it's a little unusual to see that next leg coming in and seeing so much liquidity on both sides stepping in. So seems like both sides are interested in it. So Anthony, if you found the channel only a few days ago, have you seen the videos about order flow, and have you seen the proven market behaviors video or the inelastic markets video? Those are the best videos. It's kind of hard to direct people to those because those keywords aren't like a big thing yet, but those are the videos, man. Let's see here. Oh, so we do have some numbers coming up here. What? Eurozone confidence flash? Okay. That's not too big of a deal. I haven't been following Twitter here. Some important context about the Bank of Japan allowing for higher interest rates. At the same time, it could be lowering rates with expanded purchases of government bonds. Think of the Bank of Japan's increasing JGB purchases is seeking to minimize the risk of markets testing the new 50 basis point ceiling at the risk of aggravating the structural stress of the functioning of the government bond market. Lots of research papers will be written on this policy experiment. So what this actually results in could be interesting. Oh, interesting. You've been trading for a decade. Wow. Congratulations. Let's hear Steve Leishman. Here's some data from the housing discussion on Squawk CNBC. We are building as many houses with mortgage rates at 7% as we did before the pandemic with rates at 3%. The question is how much construction needs to fall to provide the restraint the Fed is looking for in the economy. I'm not supporting the Fed's position. In fact, I think the country needs more housing, not less. But in a world where central bank believes it needs growth to run below potential to reduce inflation, and it impacts only a few sectors like housing, I just need to point out that housing, while it provides some restraint, may need to provide more, as in a drop below the construction rates when interest rates are much lower. I disagree with this idea that it only affects a few select industries. It might only affect a few select industries directly, but it has an aggregate impact on pretty much everyone. Not enough lipids in my diet? I don't know. I think that it's just that I live in a climate that is extremely dry and cold right now, and that tends to make your lips chapped. Okay, well, now we're to better prices. $43. Well, it's you live next. I mean, the Netherlands is next to an ocean, dude. It's a combination of 32°/0 Celsius and a air humidity level of basically 0. It's the desert, right? It's the desert except for it just snowed. And when it snows, it sucks all of the air out of the water. It's weird. Do you support soy consumption? So we had a conversation about this while you were gone. And I was kind of like trying to bait people into arguing about it, and it didn't happen. So my understanding is that there's a substantial reason to believe that soy products would be bad for you because they have compounds in them that mimic hormones. But all of the studies that they've done on, does soy consumption actually impact you? They found no impact. So either it has no impact or the studies are all rigged or something. But I don't particularly like soy, so. Here's the one that I'm concerned about, though. Well, two that I'm concerned about. One is high fructose corn syrup. You shouldn't have high fructose corn syrup if it's not necessary. If you're going to have waffles, you want to have syrup. Have real syrup, not high fructose corn syrup, right? And the other one is plastics. So don't drink out of plastic. It's not good. Even though the amount, there's a federally allowed limit on BPA, right? And supposedly all of these bottles, they fell well below that federally approved limit. But they found, there was a study that found that the BPAs had an impact on you well below that limit. So I say drink out of, a metal can or glass. Get yourself a borosilicate glasses because it tastes better. Tastes better coming from those. And they're more sturdy glass, less likely to break. Is glass better for the environment? I don't know. Like, so we should always be cautious about making or believing statements like that, because we might be able to say, okay, the pollution, when you discard a glass bottle, the pollution that it leaves in the environment is better, because plastics are really damaging, right? But like, what does it take to make it? How much carbon does it take to make glass? How much, of these other things does it make? The big problem that I see, and again, this is kind of the theme of the channel here for you, Anthony, is that we're really about studying systems, right? We've found, particularly in markets, that systems are better predictors of how things will go than like human psychology is, for instance. The big exception to that being that the majority of retail traders want to use technical analysis. That's got to be psychology, not the system. But I digress. So we want to understand systems. Part of understanding a system is you really have to study the whole thing. And what is happening these days is we want to make these big decisions like, we're going to save the world from global warming, by having electric cars. But then we don't think about, okay, what materials do you have to have in order to make electric cars? And how do you mine those? And what kind of impact do those have on the environment? And how are you going to recharge all of these cars? We don't have the infrastructure. We don't have the amount of power generation for it. And if you don't have clean energy sources for it, then you just end up burning oil, and then you're actually generating more carbon, right? And that's exactly what's happened. So we've made policy decisions that were short-sighted and actually increased our carbon footprint from it, right? So we'd really have to look at all angles before we could make the conclusion. I never want to say something is good for the environment or not, What do you get your milk in? I don't drink milk directly anyways, so usually it's in plastic, I think. It's kind of a problem, isn't it? Charlie McGilligot is on Bloomberg TV. Ooh. I'd like to know what he's saying. I'm really interested in this action in the S&P 500 now. They were looking pretty ugly at the beginning, but the volume did turn around and we had a pretty good buy. Now, yesterday kind of did a similar sort of a thing. And then it started falling and it just kept falling and falling and falling, right? So let's not be too hasty. But that's what happened over there. Over here on the treasuries, we did kind of pivot higher. I think that your tendency would be, from a price action perspective, to think that we're more likely to move up now and we're getting a reversal. But probably what's happening here is you've got that liquidity hole and they're expanding the range on that liquidity hole. So that does not exclude the possibility of another new low or more sell orders coming through. Nor does it give us a higher probability that we go back up to the open, for instance. But I would say that if we get back to the open, that was a pretty good downturn and then move back. And I don't know if there was actually if the volume was really that solid. I mean, it did sell. I mean, it was what, 20K to sell? 25K? But kind of felt like it came out of nowhere and the market kind of doesn't care anymore. Oh man, that's going to be a brutal. Does Utah or Colorado offer the best skiing? Utah does because it's on the west side. But they're both pretty good. Both pretty good. See, that's I need to get into snowboarding, man. $3.67 is not too bad of a price for either direction, really, if you think about it. I like that you're willing to challenge conventional wisdom and conclusions. It's not. I used to think that I was just contradictory, but what I've realized now is that it's just that I have to feel like I've looked at every piece of data available before I should make a conclusion, you know? How would hedge funds reward if a trader on his own creates a model that's alpha? Would they be given a percentage of what it makes? Yeah. Well, so generally the way that it works is like you're on a team and your team is a certain set of algos, and then based on the performance of that set of algos, you get a bonus based on some percentage of that, right? So the reality is that what you make is probably not near enough compensation for the contribution that you've made, but money's money. you can't do it outside of the firm, right? You wouldn't have the resources. So what you gonna do? It's still a good deal. It'd be a better deal to go and start your own fund, though. Okay. Should we? No, I'm maybe later. Like, oh, let's talk about what the Alexandria or Ocasio-Cortez is saying. Let's get into it, okay? The GOP says 60% of workers report living paycheck to paycheck. And Alexandria Ocasio-Cortez says, and yet y'all voted against raising the minimum wage. Okay, I'm sorry, but the minimum wage has fuck all to do about why people live paycheck to paycheck. It's just not even a factor. Okay. If you print more money out into the market, prices rise. So the effects of raising the minimum wage are kind of interesting, and they're not all good or all bad. It's quite a complicated thing. Okay. But if your concern is like the cost of living for people, it's not the freaking minimum wage. In fact, increasing the minimum wage at the current time is probably like the least helpful thing that you could do. Okay. So why is it like that? Okay. 2 reasons. Number 1, we have underbuilt in housing for almost 15 years now. There are not enough houses, particularly in urban centers. And so where people want to live, you basically have to live paycheck to paycheck in order to live there because the cost of housing is so high. That's number 1. Number 2 is Obamacare. The amount of money that you have to spend for healthcare costs since Obamacare has only gone up. Not just gone up, but like considerably so. Like when Obamacare came out, like healthcare for me was like $200 a month, and now it's like $1,000. Like it's insane. It's insane how much the cost of healthcare has gone up. Now, would that go down if we had socialized healthcare? I mean, that's an argument to be had. I'm not a huge fan of socialized healthcare, but like a lot of the things that are causing the healthcare costs to be so high, I don't think would be fixed by having a socialized healthcare. Okay, like the reality is that it's just not like a real market. The consumer is too insulated from the actual prices, and they charge some prices for some medical things that are just ridiculous. Okay, so that's why most Americans are living paycheck to paycheck. Okay, and then there's a third one that you can add on top of that, and that is that the cost of education keeps going up exponentially because government got involved in that. Okay, so there's kind of, yeah, I think that you could go, I think both parties kind of play a part in it, but the thing is the, like, Republicans are anti-inflation. Like, all of their policy, their beliefs are kind of towards higher interest rates, less inflation. Okay, and all of the Democrat policies are like in favor of higher inflation and higher costs for goods. Okay, so like the reality is that the current Democrat platform is basically only going to make the cost of living more expensive. And yeah, raising the minimum wage can I tweet? Am I going to tweet at her? We'll see if anybody responds to my tweet. Sometimes I'll be like, yeah, nobody's gonna care. Nobody's gonna care. But then people respond to me, so I don't know. We'll see. Okay, so the Treasury kind of starting to meander in here a little bit. So this might be our chance if we wanted to go long rates. 3.675 would probably be not too bad. I think for me, I'm a little concerned about the amount of time that we have left. We really should have been short when they crossed, what was it, 113.16. So about where we're at right now. Shots fired. You know what? So I've kind of been on this kick where it's like trying to avoid jumping between subjects too quickly, you know? But I end up doing it anyways. Maybe I should just embrace it. I don't know. But there are some things that when I see it come through, it's so hard for me to not want to say something about it. And that's especially true of Democrat economic policies. Like, it used to be the case that Democrats were good for business. It used to be the case that Democrats had really smart people in economics. But when you look at the main policies that the Democrat Party has been pushing here, they are not, they make the problem worse, right? Sorry, Republicans are not the ones that are preventing houses from being built. They're not. Republicans tend to want to have like less regulation and stuff. And there's a reason why the places that have like the highest housing costs are all Democrat, man. It's Democrat policies directly causing that, and everybody continues to be in denial about it. It pisses me off so much that you can come in and complain about things and then have a policy platform that is basically, you know, makes every one of those things worse. Like, I don't, you know. Well, that tick right there would be, if I had gone long at 3.675, I would be really happy about that down tick. We'll see if it follows through. Yeah, it looks like it's kind of come back. So your channels are, well, there you go. I think so. But the whole thing is like, what is most beneficial to people and what is most entertaining for people? And to some extent, what is most entertaining is also the most beneficial, because if I can get you to stick around and so that you can learn the more deeper stuff, then that's going to be beneficial to you, right? I'm worried that my scatterbrain mind is kind of a turnoff for some people, but I didn't know what to do about it. It's probably not. You know what? It's probably the performance of the channel has more to do with the nature of the very niche nature of what we're doing. It's probably the biggest factor. So I'm neither Democrat nor Republican. I look at the candidates and their track record, and I personally hate the two-party system. Well, so yeah, I think the whole thing here, and again, this is like the theme of the channel, is you kind of look at like Democrats and Republicans both end up doing things that are unhelpful, essentially. And the reason that is because, again, it's about systems, and the system kind of right now leads towards or optimizes towards certain outcomes, you know, and we have a pretty established system. So what happens in the system is eventually you get to a point where there's an inefficiency in your system that's holding you back, but the system works against changing that, right? And that's where you have real difficulties. So one of the most beneficial attributes that a system can have is the flexibility and the ability to change it over time, right? But to be able to change it in smart ways. So yeah, right now, either party that gets in office, their tendency is going to be to print money, because the way the system is set up, they have every incentive to do it. And how far does that go until it's no longer an incentive? Who knows? Maybe we find out in our lifetime, right? But the two-party system, on the other hand, is probably not the problem, in my opinion. So two-party system is actually good in that it forces changes to be good changes. You know, like people have to agree on it, but it doesn't necessarily cause deadlock. I mean, maybe more recently it has, but I think that has more to do with the dynamics of a democracy in the social media age than it does anything else, right? But in the past, the two-party system has served us very, very well. The reason that we have the problem isn't because the two-party system sucks. It's because the larger systems suck. The larger systems work in a way that you can be as idealistic and determined of a politician as you want to come in and do the right thing. The system works against it. The system just works against it. That's the ultimate problem. And if you want to change that system, if you want to fix those problems, I mean, first you got to understand the system really, really well and understand the mechanisms that lead to those behaviors, right? So it's like with gerrymandering, for instance, right? So like the reality of it is, people say gerrymandering is unfair. Well, no matter which way you like divide the districts out, it's gonna like advantage or disadvantage certain groups, right? So the question is not what's fair, because none of it's fair. The question is what's effective. What set of rules leads to the dynamics in the democracy that we want, right? That would be an example of a systems-based approach, right? If you want to fix things, don't focus on the politicians or the party, right? Focus on the systems. And you're more likely to have some success in being able to do that and change the systems from within the two-party structure than you do from a third-party structure. So multi-party structure has a set of different dynamics that very much lend themselves towards socialism. And this is why I think in general that Europe has leaned more socialist. So, you know, you want to get rid of the two-party system, it's because you're a socialist, really. You know, I'm just saying. Yeah, I mean, you probably aren't, but I'm just saying, just understand the net effect on the system of that change is probably what it is. Were you expecting this type of volatility? Well, so I was expecting the treasury market to have some trade available for us. I think that I should have gone short and I missed it. This move back up to the open, I wasn't expecting that. Wasn't expecting that at all. And it only just makes me wonder what the next step after that is going to be. You know? I'm gonna spitball here for a second. I think that I can actually come out with a bullish case from this. So here's my bullish case. Right now, the concern of the Federal Reserve is that by backing off on interest rate increases, that inflation just comes roaring right back, right? You could have this situation where you say, we're gonna lower interest rates now, and then everything just rockets. Like, for instance, back in 1982, when Volcker finally pivoted and said we're going to change tactics, essentially, the market recovered like almost all of its losses from the highs in 4 months. Okay, so you could see that happen in this economy too, and if that impulse ended up being inflationary, then we're just right back where we started, but with maybe more entrenched inflation. So that's what the Federal Reserve is worried about, right? But I think that we have a substantial amount of evidence now to suggest that the economy is drifting into recession, and that the Fed has done its job, and that the risk from going forward from here is deflation, not inflation. And I think that there's even an argument to be made that they shouldn't raise interest rates in February, especially when you look at the jobs number. It seems to me that the Federal Reserve has been getting a bad signal from the jobs, and that the jobs market is not actually as strong as the non-farms jobs report that they're using actually suggests. Okay, so with all of that in mind, the Federal Reserve needs to pivot at some point, but they got to be careful about how they do it, because they don't want it to lead to an inflationary impulse. Correct? Well, the Bank of Japan suddenly coming in and adjusting their policy, and which has resulted in tightening financial conditions, kind of is beneficial in that respect, because the Federal Reserve doesn't want financial conditions to get too loose. But if other things cause the financial conditions to ease, that makes it easier for the Federal Reserve to be able to moderate their policy, right? So from the perspective of the S&P 500, this could, in the long run, be a bullish thing. For the short-term orders, it's absolutely not, right? Interest rates are higher. They're going to react to those valuations, and it's going to cause the equity market to sell. Now that's happened, maybe they recover it. I don't know. But you get the scenario I'm setting out here. I feel the market was trading both longs and shorts. I don't know. I mean, for me in the treasury, I would say it hasn't been too bad. It's just been a little bit like unexpected. I guess in ES it is. It has been moving around, but I'm a little bit shielded from that because, I have such a high level view of the S&P 500 with the tick compression now. So to me, it doesn't seem too bad. It's certainly less than some of the volatility that we had early in the year, isn't it? But it's kind of more contextual, right? This amount of I was not expecting that Bank of Japan decision. When I saw that stuff was going on, everything, I was like, whoa. I felt like really blindsided by that. I was like, that was one that I probably should have known was maybe possible or was coming, and I was not in the loop. Normally, it's just fairly quiet right now. So it's quite volatile, contextually speaking, that we're before Christmas and we're getting the market to do a couple of crazy things, right? I probably should have taken a trade, but I think I missed out on the trade that was there. I don't think that things are in line for me to take this long. But I'm a little bit nervous about trying to step in front of this. I was thinking about doing it at 675, and that clearly wouldn't have worked, right? And I only got about 20 minutes left, so I guess I probably don't end up taking a trade today, but maybe that's for the best, because like Lucas is saying, when it's volatile like that, you know, that can work both ways. And if you take a loser, would you be able to make it back and stuff like that? It's kind of, I think that you kind of have to think about those things sometimes when you take the risk. So maybe it was better for me to not take the risk anyways. No trade is not good for the stream. I don't know if it is or not. It does seem to me that, like, especially when I first get into a trade, that people are more interested, but it also seems to me that that's not the thing that drives views the most. Actually, to be honest with you, the thing that is within our control that probably helps the stream the most is the thumbnail and title. How we can get an edge with the thumbnail and title, I'm not sure. We've tried a couple of different things and it's not been going as well. Also gets NASDAQ coins. I do think people, I totally get that people would like me to take more trades, but I kind of revel in it a little bit, because like that's the whole thing. Like I think it's a great lesson. I think it's a great way to come in and to learn trading, is you want the guy to come in and constantly be feeding you information. But the reality is that when you actually have the advantage is not all the time. And it's kind of hard to get that advantage. And so you will have periods where you just don't take a trade. And having to experience that push and pull. It's kind of like when you know, in all of those kung fu movies and you're the young and petulant kid, and you want to get to learning the cool stuff, and instead he says, no, okay, wax on, wax off. That's what you have to do, right? It's kind of like one of those things. And when the world humbles you, you learn from it better. I think a baby in the thumbnail would bring more views. I am not So I think the issue with that one is it might not bring the right viewers. The algorithm, if it was about babies, the algorithm might send the wrong traffic to us. That wouldn't help the channel. Man, can you believe that in just the last 30 minutes we've completely retraced this whole range and we're up to the top of this? I'm a little stunned. Can I complain about one more political thing? The Biden administration's performance on immigration is shameful. It's absolutely shameful. Their policies have been a complete, absolute disaster, and they lie to our face about it. They lie to our face about it, and it's so insulting to me to see that. So yesterday, Biden's press secretary saying, well, you're with the smugglers if you claim that the border is open. Basically, their argument is that the reason so many people are coming over the border is because like Republican governors and people in the media and stuff are talking about it. And if we weren't talking about it, then people wouldn't know that the opportunity is there and they wouldn't be crossing over. I think that's complete and absolute bullshit. What a load of crap. Like, everybody freaking knows what the situation is, and everybody in South America is constantly looking for when would be an advantageous time for me to try and come over and stuff right now. And you've set the laws up in a way that practically encourages it, right? And then you want to go and blame everybody else for it. And then, even after blaming everybody else for it, you don't do anything about it. It's absolutely shameful. It's just straight up lying, gaslighting to the American public. and it's so frustrating to me that probably the Biden administration never gets held accountable for it. I maybe in 2024 that ends up being a big issue and it hurts Biden, but I kind of feel like that they're just going to gaslight the public and nothing happens, you know? Okay, a woman dancing on top of Seth's desk and a Lamborghini in the background and dollar signs. Yeah. Oh, totally. Dude, if my background was a Ferrari behind me, that would definitely bring the views, wouldn't it? I'm wondering if this is like a neurotypical sort of a thing. Like, I think that neurotypical people rely on status signaling more than somebody with ADHD does. I don't give a shit. I don't care you're in a Ferrari or a Lamborghini. To me, it's like, yeah, you might have been lucky. You might have done something that, you know, like you might be a hoe, right? Like there's all sorts of ways that you can make money, and that doesn't necessarily mean that you're valuable to me, right? Move your office to the garage. Well, no, we would have to, you know, first of all, I mean, I don't make enough money to have a Lambo. I just don't. Maybe someday the channel takes off and we make a ton of money, I have to say. I've kind of thought, so I've been thinking about this lately. I've had a major shift in how I view the channel. Because I've always thought, oh, the thing is that if I could get a video editor, that the video editor would make a really significant contribution to my content and would make the channel significantly more popular. And I think the issue is that in order to get to the point where I could pay a video editor and it'd be worth it, the channel would already be at the spot where the video editor maybe wouldn't help. So the only thing that having a video editor would do would be like free up more time for me. So at some point a video editor would make sense, but it would only make sense to the point where I couldn't do other more valuable things. And if the most valuable thing that I have right now, I think, is the YouTube channel, it's the thing that I think has the single greatest probability or potential to make money for me, you know, it's the most valuable thing. So it makes sense for me to put my time into that, right? But so I think that the next shift and like where we invest what we make, because I've always said, you know, we invest this back into the channel, right? And so I've kind of always put it out as like, okay, so like our next big milestone is the channel gets over 10,000 views and then it just takes off, and then, you know, we hire a video editor. I think that instead what happens is we develop an investment advising business. I think that's what happens. I think that that's actually the real next step is we use the YouTube channel as a springboard to creating a investment advising business. I think so. I don't think I know like jack shit about how to run an investment advising business. I know a lot about investment advising though, you know, and I think I have a lot more to learn about portfolio management, but that's definitely something that we can learn, right? So I think that's the direction that we go. So like, you know, I bought the Series 65 exam. Next top priority needs to be Series 3. And then once we're advising, then we can have a new house, and then we could absolutely park. But I think I would rather have a Ferrari than a Lamborghini. Anybody can get a Lamborghini. And I personally don't see a lot of value in a huge expensive car. I'm not. Oh my gosh. So yesterday we were watching a video. I've been watching videos about like mansions and things like that. There's one that came up that I was really impressed with, and it was the most expensive home in Park City, at least currently on the market. And I was really impressed with the house. I really liked the look of it and everything. Some of those houses, I'm kind of like, I don't know who buys that. Like, rich people care about things that I don't care about. But this one I thought was good. Would love to have a house like that. And my stepson was like, oh, I don't like watching this. I feel like this stuff is bad for you because it just makes you want that thing, right? It just makes you feel materialistic and stuff like that. And I mean, maybe that's how it makes you feel, but I don't think that, I feel like that comes from a worldview that's probably not healthy. Like, there's a worldview out there that making money is bad, or wanting things is bad, or having things is bad, right? There are people that have values that believe that, right? And I think it holds you back. I think it holds you back substantially. I think the reality of it is that, you know, if you're making millions of dollars, you're contributing value to the economy, and that you have a really big responsibility to manage that money effectively. But you should also take some of that money and reward yourself. I think you should. I think that helps you continue to push and drive and generate value for society, is that there needs to be rewards for things. And there needs to be things that other people can look up to and go, oh, I want those things, right? I think one of my problems is that I'm super comfortable. I mean, like, this office here, maybe it could be better. I would like to get rid of the hutch over there and just put up another computer. I'd like to have more computers in here. But overall, I'd say this is about as good as it gets for Stream Room. I'm really happy with it, right? And so I'm not sitting here doing all these things that are like virtue signaling. I got this new hot thing. It's so expensive. You should be jealous. You should be day trading here with me so you can have them too. That's what people want. I don't care about that, just because I don't need much to be completely happy, you know? I think most religions label money as bad. I don't know about that, CD-ROM. I mean, I think that they do, but it's not like intentional. Like, I don't think that Christianity, well, okay, where is the, like, the so in the Bible it says money is the root of all evil, and I believe that it should really be read as the love of money is the root of all evil. That might be the case, right? But there's also this tradition in Christianity that, you know, you should, you know, that free commerce is good, you know? So I think that there's like what the religion professes, and then there's what people take it into that can be different sometimes. And I think that this is one of those where they're very different. This is different for the Jewish religion. So I don't think that they explicitly, you know, again, I don't know where it comes from in the Bible. I don't think that they explicitly say it, but the Jewish people and the culture is very much that you should engage in commerce, you should contribute back to the community, and that when you make money, it's not necessarily your money, it's God's money, and you just have stewardship over it. And so from that perspective, you should try and make as much money as you can, because that's money that God can use for good in the world, sort of a thing, right? Like, that's their approach to it. And I think that in my opinion is the best approach to it from like a moral religious perspective. And that's the perspective that I have on it. And that it's okay to take risks because you know that God has your back. So I only take risks when I know that I have an advantage. But when I have an advantage, I'm more than willing to go in and take a little risk on it. Probably I should take more risk than I do, but you know, I'm to the point now where I got to tell you, like, the thing that will ruin you in trading the most is having to be constantly worried about, am I going to blow this account, right? Like, I lost 20% here and now I'm not going to be able to trade it or whatever the deal is. Like, that's because that's what retail traders do. And now I've gotten to the point where I can size myself up so small and I'm having enough, you know, I'm doing well enough from it and everything that I can just do this in perpetuity and I don't have to worry about losing the account, right? But I digress. Yeah, it's an interesting thing. But people do look for virtue signaling, and I guess I need to do it more. Well, I guess the other side of it is that I have. So here's the other thing, though, and that is probably a problem. The things that would be, social proof for me are really not Lamborghinis and things like that. Like, if I had taken a different path in life, I probably could have Lamborghinis right now. But that wasn't the path that I took. The path that I took is to buy a house and raise a family, right? And so to be able to take care of my kids, well, that's the social proof. I don't know if people view it as that. I don't know if people look in here and say, look at the background and say, oh, like he has a pretty nice house. Maybe he's not stupid, you know, because it's not a Lamborghini. But, you know, owning your own home is like one of the biggest signs that somebody's been doing well that you could have, isn't it? Current economy, because that's the thing that people want. And how did I do it? Knowing about the markets. Wasn't directly from it, but I wouldn't have been able to buy this house if I didn't know how to play the market correctly. If I had missed the opportunity, tried saving up more than I needed to, not rushing, you know, because I knew I was like, I need to get into a house as fast as possible. You could ask my wife, my parents. I was obsessed with it, man. Or my ex, because I got into a house with my ex, and then when we switched, it was like, we got to do it now before the interest rates rise. I knew, and I don't know if it was just that I knew what the markets were going to do and the way that it was going. I think that there was more to it. There's something deeper. So almost like, you know, the future sometimes, and it was only because I put in all of the work, and then you're given that gift to be able to come out and know what happened. That's how I'm able to have a nice house, because of the work that I put into the markets. He thinks that triggers he uses to trade or not trade are valid. So the biggest. So again, why should you trade? You should, if you do not have an edge, then the nature of the market is you will lose money. Like, it's just straight up, it's that simple. Like, there's just no ifs, buts. Over a long enough time period, the market and the spread and everything, because we can't take advantage of the spread because we're not fast enough, right? The market making thing, like, to really truly do the market making thing, you really have to be a robot. You really do. Okay, since we can't take advantage of that, right? I can't just sit here, be uninformed, and put orders up on the DOM and everything. In order for me to make money, I have to have an active edge, something that gives me an advantage over the rest of the market. And if I don't know what that is at that moment, there's no reason for me to take a trade. It's just straight up, right? And if you're taking trades in situations where you don't know that you have that, you really are just gambling. You really are just gambling. You don't have an edge. You're just gambling, guys. So it's to say that it's not a valid thing is as I think absolutely ridiculous. And I think that this comes from a world where we were told that you trade on technical analysis and you take hundreds of trades per day, and you know that was like market making stuff. It's a different game now. Do you actually know something that will predict the future orders? Well, you're probably not going to know something that predicts the future orders all the time. You're just not. So it doesn't make sense to be trading all the time. Means you're going to trade a lot less than people would like. Yeah, probably. But that's the prudent thing to do given what we know. I wouldn't say that it's wrong most of the time. My win rate has actually been really good. So, I mean, if anything, the times it's like when I don't have like a piece of news or something that actively makes me think it's going to go a certain way, and I'm kind of more trying to jump on the trend, that I get screwed over. So, watch you for mindset and market insight, although we might not trade differently. Well, everybody should trade differently, right? Because everyone's going to have access to different information, right? The CPI trade? Well, so you might be talking about the November CPI, right? Now, was it the November CPI? No, I don't think that I've... Oh, no. The November CPI, I took the trade and I was 100% right, but because of some platform issues, I took way less from it than I should have, right? That's what happened in November. I think it was October, and I don't think it was the CPI. I don't think I traded the CPI, but there was a bad loss. I have not traded nearly as much since that bad loss in October. Was it the... And I don't think it was the CPI. I think it was like the day before or the day after, right? Yeah, because I don't remember a CPI that reversed. Maybe it was that one. I have to say, like, the super... There's kind of this really strange threshold where it's like when it becomes the headline event, like non-farms or CPI are right now, these two numbers aren't always this crazy, but when it's like really the main event, it makes it more difficult for your informational edge to help, right? So I have pulled back significantly from trading those, right? I only seem to do it 1307.22. That's way back 07. Yeah, but you're not going to win them every time. Like, that's the trade-off that you're taking, right? When you're trading off of an informational edge, you might have done all of the analysis correctly and it still not go the way that it's supposed to. Because why? Because the market's not informationally efficient. So it can be the case that you have a piece of information that the rest of the market doesn't, and it would be something that predicts the orders, but the rest of the market just doesn't get it, or the market is like more concerned about something else and you're wrong. So, you know, it would be highly unusual and probably suspect if you were trading this way and your win rate was more than 50%, right? Because generally speaking, I want my winners to be like way bigger than my losers, right? So sometimes the market keeps moving and moving, and you don't take any trades. Yeah, it's true. Well, so I think that there are days. I think that today is a day where I probably should have taken a trade and I didn't because I was too busy talking. That definitely does happen. But part of the reason that I come in and I will do that is because there are days where I just decide ahead of time that I really don't want to take a whole lot of risk at that time, right? So today it was kind of like, we might be able to take some risk, but we've got to be really careful because this one's going to be really weird. It's kind of a weird situation. And I think that was prudent because it did kind of end up being a little weird today, didn't it? even though I do think that there was an opportunity. There was an opportunity that I should have taken, right? So I decide. So like the whole thing is like when it comes into January and February, those are going to be time periods where I'm going to be more active, or rather I should be more active, right? When it doesn't count. Well, all I'm saying is that there is, I'm using seasonality largely is one of the most important factors behind when I'm going to take a trade. And so overall, you're going to see I take more trades at the beginning of the month, and this kind of week is like when there's not very much news, but it's not the end of the month. I'm less likely to trade, much less likely to trade, because that's when the majority of my losses happen. And I just know. And yes, I am kind of turning into very hesitant to trade CPI, non-farms, etc. Like this super big headline events. You know what? It wasn't CPI. I think that the last really big mistake that I made was the day when it was the Federal Reserve meeting. And that's where it is again. It's like the informational edge seems to be not as powerful when there's so many people looking at it, you know? Like when it's like the big day and everybody wants to take a trade, everybody's paying attention. I find that what happens off of that is just like becomes more and more random the more eyes are on it. And so I've starting to lean towards trading that less, is what I was getting at with that whole thing though. Right. But again, here's the larger point though that I feel like you guys aren't addressing, right? Or that you're missing. Okay. The market moving is not the thing that induces me to trade. I don't care. I don't, if the market moves, if the treasuries move 10% here, I don't necessarily care. What do I care about? If I have something that predicts future orders, right? So I have more opportunities to do that, like last day of the month, going into the first of the month, and then during all of the kind of like economic releases. I have more opportunities to do that in January, February, and March than I do other times of the year. During the summer, end of December, not as many opportunities for that, right? September, October, there's some opportunities, right? We keep seeing setups even John Grady goes into. No, I don't care. Like again, I have to have a real edge. Unless I have knowledge that will directly impact the future orders in my favor, I don't care. Just period. And I'm utilizing stylized behaviors of markets to try and take better spots and better entries and so forth, and those things all work. But like when you're talking about like order flow setups and things like that, I don't care. I did that for years and years and years. It doesn't work, guys. It just straight up doesn't work. You have to, because those things are so small that it's like the noise in the market can almost cancel them out now, right? It's not, that seems like what you want is, yeah, it is. Well, it's not insider information. I'm not going to trade on information that would be like illegal to trade on. But yeah, that's kind of the level that you want to think about it, right? I mean, it could be separate. Like, so let's the next big event, like the next place where I might end up trading, right, is going to be the first days of the year and non-farms. Then after non-farms, like activity really picks up, right? So like, let's look at non-farms. What is it that I need to know? Well, like if non-farms came out and that number ended up being negative, then I would probably take a trade, right? So that is, it would be like a huge departure from what the market is expecting, what the Federal Reserve is expecting, it would really shift the markets overall as a whole. And I know that me, in the first 30 seconds of that, the number of people that will actually end up submitting orders because of that non-farms report could be like almost everybody in the market. And yet I know that in that first 30 seconds, I'm going to be able to take it before any of them. So I have an advantage, and then I'll take the trade. That's not inside information, right? But it is information that not everybody has at that moment. And what I'm good at is being able to look at the piece of information, know what it means within the context of the market, including what people's positions and expectations are and so forth, to be able to make a decision about which way it's going to go. And if you're doing that correctly and your winners are larger than your losers, then probably the best that you can ask for is 50% win rate. Right? Well, so I am going to stream until this Friday, but yeah, I'm not going to stream next week, I should say. I tell you what, there was what was it, 2018, where like people made a big deal about this. I was like, you don't trade in this weekend, and there was some people that were really wanted to trade it for whatever reason, and then that time period, and there was a little bit further of one because I think that Christmas would have been like, let's see here, this is 21, 20, 19, 18. Yeah, it was on a Thursday. So it was like that whole week afterwards, it was just like the market just sold and sold and sold. It was so brutal and ugly. And I didn't stream. I didn't watch it. And there was certainly opportunity to trade, but I didn't trade it. I feel that next week markets will be dead, yes. So given that we've been kind of selling, and if we continue to sell, like if this week ends up being negative, that probably increases the probability of there maybe being some volatility in that 1 week. Okay. But I'm just warning you, this week between Christmas and New Year is almost always the least liquid week of the year. It's worse than summer. So I really, to me, it's a waste of time. And I go and I spend that time writing scripts and doing things for the channel instead of streaming. So I'm not sure. I would say it's more nuanced than that, Lucas. So far we have proof traders are quite active. Actually, it's not like years ago anymore. The liquidity, especially in the equities market, is not as good as it was last week. It just isn't. There is a lot of activity right now, though, isn't there? And I think that there's, today it's because of the Bank of Japan. Yesterday it might have been like some gamma unclenched flows. I think that there is a lot of speculation still going on. Some script programming. I feel like that if I I just put some white noise on and write that's probably, I get more done though. So what do I have? The big thing is I need to finish that strategy PDF. I'm almost done with it, so I should be able to get that one done and get through. And I'm going to make a video about my top Ninja Trader tips. I also need to make sure to spend some time to take some pictures for thumbnails. So those are my main goals next week. And then study. That's what we can use it. So yeah, that type of volatility. It's kind of difficult because like we like kind of distort the meaning of volatility sometimes, right? So like volatility as like how much does it move that day? Yeah, it's like you might get slightly increased volatility, but it's like the bad kind. It's like the kind where it just jumps and you either won or you didn't, and there's like no way for you to manage risk or predict moves. It's just like it does random shit everywhere and you get diced up. I think that there was a lot of that today too, to be honest with you, although there was some good trends within it. We totally could have traded it, but usually that action, it just gets dicey. It just gets dicey. Yeah. So, you know. But there's the other thing is that we kind of have to differentiate between like how much it moves, how much volume you're actually getting, and like the choppiness of it, right? Because there are, you can have a move that like moves really, really far, and it's just like smooth one-way direction all the way, and that's like the greatest action to ever trade ever, is like a freight train that goes really, really far. But then there's the other ones that are like, you know, it jumps around a lot and it's really random, and even though it ends up moving really far, and those are so hard to day trade. You know, most of that's like, because the liquidity is low, the people executing the orders are really messing with you to get like stir liquidity up, and so it's you know, you're being preyed upon more, basically. You know what? I've gone like way over. I gotta get going. You need to have an edge, guys. You really do, and I don't think that the flows on their own usually enough. Certainly not with the instrument that I'm trading. So I will see you guys tomorrow. In the meantime, stay